Mike started out on the pits. Actually, he was actually a trader on the floor, the NYMEX. So he's one of those, dinosaurs that had to turn and reinvent themselves and go to the screens and all this kind of stuff. And Mike's currently in one of those. I've got to reinvent myself again. And Mike is a perfect guy to have on this webinar today. Him and I have been working together as a mentor coach type of relationship the past couple months, and he is a top-notch guy, a hard worker. He knows what it takes to be successful. He has done it on multiple occasions, and he is putting in the work required to be successful again as we speak. And that's part of why we're here today. Just a little bit about our firm, S&B Capital. We're a proprietary trading desk in New York. We're not one of those places where the trader puts up their own capital and we just simply provide you leverage and take a commission on whatever your trades are doing or a share in that. We're a true prop desk in terms of there's no outside investment. It's all partner capital. Traders are not allowed to put up their own money. Again, all partner capital. The firm assumes all the risk, provides the technology, provides everything that we need to be successful, including things like this where we get to interact with Dr. S and improve. Specifically, S&B Capital has been an equities only desk historically. We recently expanded into the options world, and we now have 15 guys. They're all remote and they trade on the options desk, and they're doing amazing things over there. I've been tasked with eventually starting a futures arm to what we're doing here. And part of doing that, I have a Slack room. If you guys haven't heard of Slack before, it's an amazing kind of channel for chat and ways of communicating and whatnot. It's really, really good. Easy screen shares, all kinds of stuff. And so that's kind of the foundation for this community, where Mike and myself and others and Dr. S are there, and we can have that community get better. Each and every day, I trade live and share my screen and share my audio. I don't do video like this, but just in the sake of transparency and really, showing people that it can be done. I know I grew up on a dirt road in Alabama, and when I first started looking to get into trading, I found it pretty tough in rural Alabama to find other traders, to find examples of it actually being done. And so now, from the seat that I'm in now, I love to do that and to show that it's possible, to inspire people and build that community. And it's a way for me to better serve the guys that I'm coaching and mentoring and whatnot, to help them get better and show them that I'm trading the same strategy and different things that I'm teaching them. So today, the real purpose is to go through a weekly review. It is to sit down with Mike and offer mentoring, offer coaching from myself and Dr. Steenbarger, to really hone in on how Mike can continue his path of improvement. And for you guys at home, it's to show you what this process looks like for professionals, what the nitty gritty. This is not some flashy, sexy webinar where we're going to wow you and dazzle you with stuff. We're just going to get to work here like we do week in and week out. Okay. It's a kind of a special version today. Dr. S is not always involved with these with my students, so this is very cool. The purpose today is not to teach you any of the setups or analysis today. We'll not be doing any of that or even taking questions on that. Today is really to give you a sneak peek into a professional review process and how we can really do the hard work to get better. So with that, Mike, how are you doing today?
Good, Merritt. Thank you for the kind words, except for the dinosaur part.
I thought you might say something about that. Oh, me. Mike's a good guy. So as I ask you a lot of times when we kind of start out a weekly call or whatnot, how do you feel about the week? Where are you at in terms of like a big 30,000 foot view and whatnot?
Well, I mean, obviously, we're probably going to focus more on last week's action.
Yes.
I would think because I didn't trade on Monday, and today was just one day.
My week that I'm looking at starts
Right.
the day after we spoke, so Tuesday through today.
Okay, great. So I had noticed that one of the things, just to give a little background, that I had recently, before I started working with you, obviously trading S&P futures mostly, and I've recently transitioned back to trading crude oil, which is what I traded when I was on the trading floor, just due to the overwhelmingly low volatility in the ES futures. And I noticed since I had made that transition, I had been kind of struggling with some over trading, and I wanted to try to put some things in place along with your help to try to eliminate subpar trades, because the over trading really manifests itself in taking trades that don't really fit, aren't really good enough to take. Those are the ones that I need to eliminate. So you had early on provided me with what we came up with as a kind of a good trade checklist. But I think that in adding to that list, it was important to add to the effectiveness of that list. It was important to add another layer to it, and which I did last week, which was, before I even get into that list and kind of gauging a trade and if it's good enough to enter. My first question before getting into that list has to be: is the trade consistent with your narrative? And we had obviously worked a long time on kind of coming up with my narrative of what's transpiring in the market on a bigger view, and where I think the ultimate destination of the market is over the next few days, week, or whatever, and making trades that are consistent with that narrative and with that view.
Yes. Last week when we spoke,
So
one of the biggest things we came across was, and in fact, if I pull up my notes with you, I want to correctly quote you here. We came across something where Mike had literally, his words were, it was worth a shot. Right. And that's something I kind of hammered on and said, do we really want to be taking trades that we think are marginally worth a shot? And that definitely resonated with Mike. And I can tell you, before we get into all of it, I feel like you've done a really, really, really good job of sticking with a process goal. You didn't have 100% success, but I would put it at 90. What would you put it at?
Yeah, I would put it in, as far as the process goal. I thought I did a good job last week of sticking to that and really, applying that new filter well. Like you said, I mean, there were a couple of slip ups, including probably one today that I entered that wasn't really a great trade, but I understand that it's a work in progress, and I definitely saw a huge improvement in that in that process last week at the end of the week, and I was very happy with the way the week ended. So
yes, as was I. And for those of you at home, and I do want to stay pretty focused on you, Mike, but coming up with something specific to get better at week in, week out is absolutely crucial to development. If you just have this idea of getting better, this is a conversation Mike and I had a few months ago. It's crucial to hone in on something to get better at and really, really just attack it and have a daily focus on that. And so I love to hear it. So
yeah, and I think that's a great. I mean, if I could just interject, I think that's a great point. And that even prior to working with you, I would often find myself saying things like, "Well, I'm over trading. I need to trade less," but I wasn't implementing specific measures to trade less, or specific measures to improve, and focusing on the process rather than saying, "Oh, I need to trade less." And I think that this is a good example. And we came up with something early on with you when you gave me the checklist, and then we further refined that by adding, does this fit my narrative? So,
Okay. So really, really good job, and we'll get into more of that. I have a few trades to go into and whatnot, but what else in terms of review from this past week? Process goal, I feel like you really, really honed in on, did a good job. What else are you seeing?
yeah, another thing I was where I continue to work on is kind of committing to trades and not running my stop for no, or not looking for reasons to exit a trade that doesn't work like immediately. Um, so there was some improvement there as well.
So now let's talk about that in terms of, I know from a couple of your trade comments you had mentioned the footprint specifically.
Mm-hmm.
So you get into a trade, you feel like it's a momentum turning point, and it is an incomplete auction on the footprint, right?
Right.
Or even, I think in one case I saw, you get into a trade, perhaps the high is clean, let's say it's a short, and it starts to kind of trade up a bit, and that even that next footprint bar begins to get incomplete, so you think it's just done, right? That also happened.
Yes.
Okay.
Yeah. So one of the things we spoke, I mean, I'm trying to, or I'm focusing on. I don't like to use the word trying because it implies failure.
Yep.
But I'm working on. I have a tendency. We've done this. I've done this before with you. Is that when you introduce something new to me that I haven't used before, I have a little tendency to kind of over focus on it. And we kind of described it as the shiny new toy at Christmas, and you kind of throw your old toys to the side and it's like, oh, this is the greatest thing in the world, and you want to play with that all day.
Yep.
And
Yep.
and then after a while, you kind of wait. Those toys over there, they were pretty good too. So you realize they have a function. So I think that the footprint, which was the most recently introduced thing to me by you, ended up again in the role of that shiny new toy, and I was putting a little bit too much focus on it. I think that my focus really there should be on I think the timing of entries. I think it helps on the timing of entries better, but I shouldn't be stopping myself out of trades based on incompletion of the footprint if everything else on my list checks out. That's
Yes.
just a factor that should be like the last factor, not the determining factor.
And from my perspective, one of the things that you struggled with early on was being in rhythm with the overall kind of harmonic rotations and everything, right?
Right.
To me, that's really become pretty second nature to you
Mm-hmm.
at this point in time. So the footprint can help add value to that. But when you're finding entries, again, we've talked about this, that are confluent with the higher time frame, and your narrative that you see that's unfolding, and you find yourself with in terms of intraday developing value, and everything works, it's in rhythm, and that little footprint gets incomplete, it's okay to ignore that last little bitty variable, especially when you see the delta start to shift and sellers really whacking the bids or whatever. If you're looking to get short, if you see all that stuff line up, don't worry about the footprint, honor your stop, do your thing, right?
Right. Yep.
So like you said, shiny new toy, get a little bit too fixated on this. We talked about the pyramid of putting everything together, and that footprint is one of the very, very last kind of finishing touches that can just slightly enhance what we're doing.
Right.
So absolutely. One thing I wanted to tell you is that a couple of the times that where I saw you make a decision based off of an incomplete auction on a footprint, it was right at kind of key areas. And by key areas, I mean one case that comes to mind, it was right into VWAP, okay?
Mm-hmm.
More times than not, well, more times, that's not the right way to say it. Very often when we see an incomplete auction on a footprint into an area, a key reference like previous high, previous low, VWAP,
Right.
a lot of times somebody just kind of got caught right there, and it's a little bit of a trap. The offer lifted and somebody just slammed it right back, and it's not as significant when it happens right at a key reference. Remember several days ago, and Camacho in the chat today brought this up, there was kind of a 4 wide poor low in crude that had occurred right at a key area. When those poor lows occur right at key areas, we treat those differently than if they're kind of more in open space. That's more of an incomplete auction cycle. But when we see the incompletion right at a key short-term reference, it has a little bit different connotation. So you can take that and apply that within the footprint as well.
Okay. Now that should be helpful. I think that, in general, I'm, getting better at just kind of incorporating the footprint into the whole situation rather than kind of hyper focusing on it.
Sure.
But that little tidbit will be helpful.
Cool. So my next point is to jump into some stats and whatnot from the week. If you want to continue on anything that you feel is really, really important right now, feel free to do that, or else we can jump into some stats.
No, I don't have anything else right at the moment.
Yeah. Honestly, I again, when Mike and I work together, it is all about the process goal of really completing what we set out to complete for the coming week. And he has done a really, really good job of doing that. Let me share my screen here. You guys got this up here?
Yeah, I'm seeing it.
Mm-hmm. Okay, great. This is the link right here to join our Slack room for all of you on the call. So when it comes to stats, Mike, you know this chart. If each one of these bars represents a trade, if it goes below, this is 0 right here. If it goes below 0, that is drawdown you took on a trade. If any wick or any candle, anything goes above 0, that is, favorable excursion experienced intra trade. And then whether or not the bar closes as a winner or a loser is simply where we close out the trade within that spectrum for the closing P&L. So 2 things that stood out to me this week were these really big wins that you had going. Okay. It doesn't, and I took off the P&L numbers here. It doesn't matter, guys. So you can see this is 1R here essentially. And so each one of these lines essentially counts for 1 unit of risk that Mike takes. Okay. So we had a couple 3+ R favorable wins that either turned into losses or whatnot. And specifically this first one I want to talk about a little bit later. But overall, and this is one thing we didn't see months ago, really nice R multiples, and at least the potential of them on your trades. Yes, the win percent was not great, right? And we're going to talk about that. But you really are giving trades a chance to work a very, very good amount of the time. So that's very encouraging. Always love to see that. If you can do this, that is, again, a recipe for success. Now, over the past couple months, this is your max adverse excursion. Okay, so how much heat you're taking on trades. So you had been grinding higher, kind of improving your timing. We had a big setback, and now you've really been bringing that back. Okay, that's great to see. On the favorable side, okay, you were really, really improving. Again, a setback. This is kind of held, right? We haven't quite seen enough of the big winners. And as we'll look at, when we look at win percent, this is abnormal. Holding around 20% on a rolling 30 trade average, it's really low, right?
Yes.
So it's something that we've seen coming the past couple weeks, and we've addressed with selectivity around trading around the narrative. And to be honest, you didn't have that many trades this week. 17 total. So we're not really moving the needle on this quite yet. I would imagine that this is one way where stats can be a little misleading. I would imagine that if you continue along this path and continue with this focus on your process around trading with the narrative, that this win percent will improve. I have no doubt. So I'm not really concerned about it where it's at right now. I think we've already made that adjustment, and the stats will reflect that with continued focus there.
Right.
So I like what I see. We just want to see the continued selectivity, and a couple things I want to talk about with specific trades. So when we go back to 627, and we take a look at this long here, 1029 on the 27th. This is that first trade that we talked about on this chart, where you can see it went a long ways in your favor, and we ended up with a loss in the trade, right?
Yes.
So I know I had previously commented on your trader view about that. Do you agree that you perhaps hung on to that too long, even after some of the ads didn't work out and whatnot? Or how do you feel about the overall management of that?
Yeah, I think that I'm just refreshing my memory. I'm just reading over my comments. So my comments, I'll actually read them. My comments in my journal. This was a very good entry. Don't think I managed the trade very well. Patiently waited for an opportunity after missing an early opportunity to get long in the upper 60s. I was expecting a bit more downside first. Scaled one on new high of day, then scaled another after what looked like rejection from an order flow reference that we use. Perhaps I should have waited for retest. I tried two ads, stopped on both, finally exited original long after it couldn't hold VWAP. So I think that I got a little too aggressive on the ads.
Yes. At what point do you feel like order flow breaks down? What time of day?
Well, I see a divergence at the between the two highs that were made between like 1040. I'm on the snapshot of it. I'm not on the actual chart. So there were two highs that were made back to back around like in the 1040 to 1045.
Yep, range. That's where it started.
So there's divergence there in the order flow, and then.
And that's before you ever added, correct?
Yes. Then we kind of just get choppy sideways, and then I mean, that was the first evidence, I would say, of a breakdown in order flow.
It was.
And then kind of in the early 11, what is it, on that last high.
Right here?
Yeah, and then coming into there, we kind of get, even though the market is kind of moving, it's kind of moving sideways lower, but the order flow really kind of broke down and turned to the downside there.
Here's one thing
I added into not very supportive or unsupportive order flow, I should say, on the first ad.
Right. RTH was still in your favor at that point. One thing that I'm actually noticing as something that's developing in the crude market is very powerful signal when we get a combination of divergences in order flow. So I'm actually looking for positive and negative.
Right.
So one thing that we see is, as you pointed out, at this high, we start to see that positive divergence, and then it really flatlines. There's no one bidding this thing up, right?
Right.
And then you see a ton of buying, which between these two swing highs is a negative form of divergence.
Right.
So that combination of those two, I think, is really powerful. And then the sellers just whack it. And then you're looking to add. And then RTH breaks down. It's getting rotational. and you're still adding or still holding, and it just doesn't. I think you may have gotten a little attached to that trade there. I don't often see you hold all the way back down to VWAP during an imbalance like that and whatnot.
Yeah, I would agree.
All right. So now you and I both knew that there was big opportunity unfolding in crude on our higher time frame value charts during this day, right? That's why you stuck with this idea. That's why perhaps you got really aggressive with the ads, and even perhaps you really held on longer than normal when I think this trade was really kind of telling us the trend is done, right?
Yeah, I think what I missed in that scenario was there was still plenty of room. I don't think since we've been working together, I've been more spot on in my narrative than I was last week.
And obviously you knew it too, based on what's coming next.
Right. But I think what I failed to see in that particular trade that I held too long was that there was still a lot of room for a pullback that still would have my overall theory still intact.
Yes.
And
yes.
that's so, and I was, and that's what I should have been waiting for. I mean, I ultimately did catch some of it, but I mean.
Yep.
Yeah.
So, we're going into the weekly +2 as well. And so during this trade, I feel like there was, kind of a bit of attachment to there. One phrase I love to tell myself is never forget to be a day trader. Right. As long as we're a day trader, let's be a day trader. We can have these amazing views of what the market is accomplishing overall. But beyond that, we gotta remember to stick with our intraday references. And if that overall theme is going to play out nicely, more times than not, we're going to get another opportunity.
Yep.
Okay. So as Dr. S will vouch, and he's talked about in the past several weeks, lower volatility environments, he's seeing people, short volatility performing well, taking those profits, running and gunning with that intraday imbalance. When it's off, when the delta breaks down, we stand aside and we can wait for a better opportunity. And so as you saw, return pullback forming on the higher time frame, and then absolutely nailed it in the after hours with this little beauty of an entry right here, and just a beautiful trade. And so like I teed you up with on the call here, this is the type of tenacity and stick with itness that I feel that you continually display. And so here you are after hours, get into a fantastic trade, which was the actual pullback after the intraday trend broke down. So you're seeing those multiple timeframes, I think, better than ever.
Right.
To stick that entry there.
Yeah, and I think that I mean, this particular trade, I think, is really I don't know, at the risk of sounding like I'm patting myself on the back, I think I'm trying to more compliment the work that you've been doing with me, is that that the fact that I generally don't trade after 2:30 in the crude. Right. And this, I felt like it was too good an opportunity to pass on because of all the stuff that we've worked on, and the setup was something that I said, this is something that I'm going to be kicking myself if I don't take. So.
Yep. Awesome. Love it. One thing I wanted to talk about was this beautiful sequence on the 29th, actually. So we had reached some of those higher time frame destinations, right? We were running into monthly VWAP overnight. We saw sellers start to come in, and you looked for a pullback short. I get it, okay. Perhaps lost some sight of some of the overall thesis, but it could have been a point where this market turned, no doubt. Mm-hmm. So I don't have a problem with the entry, other than I would prefer you wait on an imbalance here. This was from the right of the middle, taking an entry from VWAP itself on a flat VWAP, which is something we really want to be careful about. But, really, really good job flipping once that broke down. This is, This is really, really good. So this is also an aggressive entry, like we talked about on the last trade, where it's near the +2 on the weekly, and it can be iffy and whatnot. But the way you handled this trade was much, much better in terms of being aggressive with, okay, it's not working out. Order flows diverging. We're breaking down here. We are extended. We are at some potential targets. I'm going to just stand aside here as this breaks down, and not really lose anything on the trade.
Right.
That's when you're in kind of a compromised situation like that, where the edge is there, you can see it potentially unfolding, you see your narrative playing out, but things start to break down on you, and you accept that quickly and stand aside. I love to see that. That's really, really good.
Right.
All right. Around this area here was a trouble spot for you, right?
We're
These
going
three
to
short entries.
Yeah, what time are you at? 11:40.
11:39, 11:47.
On the 29th, right?
Yep.
Yeah.
Yep.
Yeah, this was. I'm just refreshing by looking at the comments. The truth of the matter is, on the original short, had I just left my original stop, trade would have been a home run. So,
my question: where do you feel like the inability to commit to that stop? What went wrong there? I know you felt like you may have been early, but look, I mean, it's either a setup or it's not, right?
Right.
I think the entry was warranted. I don't think it was too early.
I'm trying to see where I was relative to the.
It was an imbalanced pullback on RTH.
The 11:39 was the entry there the first time, right?
Yes.
Yep. Okay. I do find myself being a little conflicted with when we have like RTH imbalanced and ETH balancing, or vice versa.
Absolutely.
So I think on those situations I have a trouble committing to a stop, and then we tagged that high so many times that I just I kept thinking that it was inevitable that it was going to be taken out, but usually whenever I think something has to happen, that's usually a good sign that I'm not thinking right. So.
And that was after that third entry, right? You're talking about it. This 11 cent was incomplete again.
Right. I mean, I took myself out twice.
Right.
On the first trade and the third trade, and neither one of those trades did my original stop never got hit.
Right.
And they weren't wide stops. I mean, I was
turning point stops plus a little room.
Short at what, 07. I was short at 05 with a 12 stop, which is nothing, and I was short at again at was that the second one? No, that's the wrong one. Yeah. I mean, they were both in the same neighborhood with pretty tight stops. I mean, 6 to 8 cent stops, which at a turning point that where I obviously properly identified the turning point, but didn't commit to the trade. So.
Well, and I think it comes down to what you're talking about. When ETH and RTH are not painting the same picture, first and foremost, it's the narrative, right? Is this trade idea lining up with that overall contextual narrative?
Right.
Now you know your directional bias, where that narrative changes, all that good stuff, okay?
Right.
If you can pick out a story on ETH or RTH that makes sense, like you did here, I just want you to commit to it, right? Whether that means minimize the other one and saying, I'm really committing here to this one and this story that's unfolding, or whether or not you feel like you need a little more wiggle room on the stop, adjust the stop, make sure that the risk reward still makes sense for the structural targets and first scales and everything like normal. But those are two options. Either truly commit to one, or have a stop place to where both of them can still work out.
Mm-hmm. Okay.
Merritt, Mike, can I jump in?
Yeah.
Sure.
Yeah, let me raise a couple of issues from a psychological vantage point. It's been very helpful for me to sit back and listen and hear how you process information, Mike, and also to hear the kinds of things that you and the group focus on, Merritt. Can everyone hear me okay?
Yes.
Good,
Okay.
good, okay, good. I think one of the real risks in being very market focused is that we can lose a degree of self-awareness. Mike, you mentioned over trading. You also mentioned some problems committing to trades, front running some of the exits. So that there's an issue here about the consistency of your action. You have the narrative as you're talking about, but you're not acting in the consistent way that you would like to with respect to that narrative. And that's showing up in some of the statistics, such as the low hit rate, right? Yeah. I find consistently that our trading statistics reveal something about our personality. And so when we normally have a higher hit rate and suddenly during a period of time we have quite a low hit rate, either something has radically changed in the market that's leading to this low hit rate that we haven't adapted to, or something has changed in our implementation of our trades that we've become less consistent.
Right.
So the question is, how do we become more consistent in acting upon our ideas? My concern is that in becoming ever more market focused, which is a good thing, we can lose a degree of self-awareness. So what I would have you think about are what I would call the psychological setups that lead to your good trading. We're familiar with trading setups, but what are your psychological setups? What sets you up for good trading and what sets you up for pretty poor trading? I would argue that there are three dimensions to the psychological setups that we could look at.
Okay.
The first being our physical state. Are we operating in a relaxed mode or a tense mode, an energized mode or a fatigued mode? What's our physical state? Then we have our emotional state. Are we operating in a rather positive and constructive mind frame? Or are we pretty negative, pessimistic? And finally, we have our cognitive state. Are we more focused or are we more distracted? Are we more open-minded or are we more closed-minded? When we trade poorly, that poor trading is typically preceded by a state shift. This is a very important principle. If you only take one thing away from your time with me here today, that should be it. Our best trading and our worst trading are preceded by states of mind, states of body, states of emotion. And our psychological setups are when we are in the zone, in the right place physically, emotionally, and cognitively. Well, how do we know if we're in the right state or not? That's where that self-awareness comes in. If we're totally and completely absorbed in markets, then we're not simultaneously self-aware. So I would argue that good trading means delving into markets and being completely absorbed, but also being able to pull apart, to stand back from markets so that we become good self-observers.
Yeah, and I think I do have a tendency at times to. I've done a lot of work over the last couple of years on self-awareness, including
Good.
reading many of your much of your stuff and
Mm-hmm.
a few of your books, and I do think I need to do a better job of implementing measures to. Um, I think a lot of times I become aware of a state that's not necessarily conducive to good trading, but I choose to kind of try and like plow through it by, you know, diving into the market and analysis, and that doesn't work so well, to be honest with you.
Yeah, very good observation. Yeah, you're absolutely right. That doesn't work. But you're making a really important distinction, Mike. Are you aware of the state shift when it's going on, and then you choose to not act on it, perhaps? Or do you only figure out that the state had shifted well after the fact? Go ahead.
I'm sorry. No, I think that it used to be more of the latter, and now it's more of the former, and that I do recognize it, but now putting in processes, much the way I have the trade processes, putting in processes to deal with those situations where I know I'm, you know, not particularly open-minded about the market, or if I'm in the, you know, a rundown or tired state physically, or where if I'm in a, you know, a bad place, you know, emotionally, because I had an argument with my wife before I came to work, or whatever it may be. I'm just,
Mm-hmm.
but I do think that you know, I recognize those things better now, but I'm not doing a good job of acting on them preventatively, rather
Yes.
than, you know, so I think I'm doing a better job being aware of them, but not doing a great job of acting on them.
Right. And so it will be helpful to develop some routines for actually acting on those occasions when you're identifying that your physical state, your emotional state, or your cognitive state have shifted. You're aware that you're not in your zone, not in the right mode for your best trading. So, what can you do? The important principle is that as long as you're in the right states, then you prioritize the market. If you're in the wrong states, then you have to prioritize yourself. Because if you're not in the right states, you're not going to trade well, and that's going to be hurtful to your business, and that's going to set you back personally as well. So that the challenge is to be able to prioritize stepping away from the screens
Right.
and focusing on yourself. Now, as you get better and better and better at focusing on yourself and shifting your state, that stepping away from the screens can be for a shorter and shorter time.
Mm-hmm.
But what you're doing is, and this gets back to something we talked about when I addressed a group earlier, you're really making an investment in your trading.
Mm-hmm.
You are saying to yourself, I'm the priority. If I'm not in the right state, I'm not going to process information the best ways. I'm not going to manage my capital in the best ways. I'm the priority. My state is the priority. And so you create routines where you can quickly step away from the screen and get yourself in the right physical state, the right emotional state, the right cognitive state. That might mean splashing your face with cold water, doing some quick exercises, pumping up, getting yourself energized because you've been in front of the screen too long and you're fatigued and you've lost some willpower.
Right.
It could mean, after being frustrated, recognizing it, sitting back, taking some deep breaths, doing some imagery, maybe with some music in the background, calming yourself down, and then going back in your right state.
Right.
But you are actually practicing going from being in the wrong state to being in the right state. You're practicing shifting your states. And as you point out, that takes self-awareness in the beginning.
Yeah, I think that those will be very helpful. And thinking of it as literally kind of as a, much like I have this, trading, trade checklist as to the trades I want to put on. I think that I should go through from intermittently throughout the day, kind of like a check on, all right, what's my physical state, what's my emotional state, what's my cognitive state, and
Phenomenal idea.
Right.
Phenomenal idea, Mike.
Right.
That check up from the neck up.
Right. Yep.
You know, several times a day, you're going to just take your temperature and say, okay, what is my emotional state? What is my physical state? Am I out of my peak? Do I need to do something to get into my peak mode?
Right.
Great. If you did that mid-morning, midday, and mid-afternoon, my goodness.
Right.
You would intercept bad trading so that a mistake or a slip up wouldn't cascade into a real drawdown. Yep. Now, let me mention one other technique, and I realize we're getting on in time, but here's a powerful psychological technique that is relevant to this issue that Mike is bringing up. What if before trading starts, we mentally rehearse, play a movie in our head of the different trading situations that get us out of our ideal state? So this is a little counterintuitive. What if you vividly imagine getting stopped out and getting stopped out again on a subsequent trade and again, and you're getting frustrated? What if you vividly imagine trading, getting things wrong and getting frustrated, and you allow yourself to feel that frustration, but then in your mental rehearsal, in your imagery, you actually visualize yourself stepping back from the screens, taking the deep breaths, calming yourself, so that you're vividly imagining something going wrong in your trading, but you're keeping yourself calm and focused, and you're mentally rehearsing doing the right thing.
Mm-hmm. No,
okay. So what you're doing is a kind of mental preparation. Imagine yourself being very fatigued. You're really tired. And then you visualize yourself getting yourself pumped up, getting yourself energized.
Yeah, that's something I never considered. And
it's a behavioral technique.
Right.
That's used for people who have anxiety issues. Mm-hmm. There are certain things that make them anxious, and so they mentally rehearse those situations while keeping themselves calm and focused, and they mentally rehearse how they're going to respond to that situation. So if I have a phobia, if I'm afraid of certain things, let's say I'm afraid of dogs, I will imagine myself interacting with a dog, maybe seeing a dog at the other side of the room, and maybe seeing a dog next to me, and maybe touching a dog. And I'll imagine these things that are scary things for me, but I'm keeping myself calm. I'm breathing deeply and slowly, and I'm imagining how I'm talking to myself and how I'm keeping myself calm. And I do that in imagery again and again and again and again, and that transfers over to the actual event. The rehearsals allow you to call upon those behaviors in the real life situation.
Right.
That can work for trading as well. You're mentally rehearsing doing the right thing. And doing the right thing, usually, as you point out, Mike, the first step is recognizing that you're out of your zone and then taking that break, stepping back from the screen to prioritize yourself.
Yeah, I think that I believe that will be helpful in doing that, and gives me tools to kind of, like we said, check on my states and then do something about it when I'm not just realizing what state I'm in, but then actually doing something about it.
I believe so. And for me, and I've written about this on the Trader Feed blog, one of the beauties of working on our trading is that it also is working on ourselves, and the techniques, the methods we use to improve our trading can improve us in our personal lives. We become better people as we become better traders. And so that technique of anticipating problems, recognizing when you're getting out of your state, that happens in interpersonal situations. How many times have we gotten into an argument with a loved one just because we're in an angry or frustrated state, something hasn't gone well, and if we had just taken a moment to step back, recognize the state we're in, shift our state, put ourselves in a calm, focused mode, it could suddenly become a very constructive conversation. These same skills that work for trading can work in other areas of our lives. For me, it's worked very much during my parenting, that I end up sometimes, in the past, I've made impulsive actions and said things impulsively, which are not helpful as a parent. But if I use the same techniques as in trading, I can step back and respond the way I want to respond.
Right. Good stuff.
Fantastic.
Yeah, so someone just asked a question, and he said, if you mentally rehearse things going wrong, doesn't that create the reality? Well, the fact of the matter is, if you ignore things going wrong and you're not prepared for that, that makes you most vulnerable of all. If you're mentally rehearsing something going wrong and imagining coping with that in a very constructive way, that's called being mentally and emotionally prepared for an event. I think it's good to rehearse negative events because then we can be prepared for them. It's not good to catastrophize those negative events, but it's very good to imagine them vividly and deal with them constructively. That's called coping. That's called preparation.
Fantastic.
And but if you look on the Trader Feed blog, if you go in the index, or if you go in Google and just type in Trader Feed and then exposure, EXPOSURE, that's what these techniques are known as. These are exposure techniques. I've written about them in the Daily Trading Coach book, and there are a number of blog posts relevant to exposure methods.
Fantastic. I was taking notes. I hope you were too, Mike. I know you were.
I was.
You know, that was one of the questions I was actually going to follow up with you, Dr. S, was about, you know, when to be more market focused, when to focus more on the self and all these kind of things. And doing that initial analysis, or perhaps analysis throughout the day, of where are you within these three-dimensional type of states, and then prioritizing, that's unbelievable. That's fantastic. That's something I'm going to look to incorporate into what I'm doing even. So,
you know what an analogy would be, Merritt, would be you get caught up in the moment-to-moment price action if you're a short-term trader, but every so often you step back and you look at the hourly chart and the daily chart because you want to update your sense of context, right?
Yep.
Well, that stepping back and looking at the bigger picture chart is the same process as stepping back and looking at yourself. You're getting your nose out of the moment-to-moment reality and taking a bigger picture look. In this case, it's a bigger picture look at yourself.
Excellent. Love it. We're about out of time, but just to wrap up just one or two things, Mike. Going forward, really being more careful with ads, right? Ads can be pretty dangerous to an existing positive expectancy.
Mm-hmm.
If order flow is breaking down on you, I would prefer to not see the ads.
Okay.
If everything looks great with order flow, I think it's a good time to go with the ads, with all the usual references and whatnot as well. Great insights from Dr. S. A couple things.
Yeah, someone mentioned anxiety in trading. Let me just make a couple of quick comments about that. Again, I want to be mindful of people's schedules. Anxiety can be caused by oversizing trades. And so the P&L volatility is just more than we can handle. So whenever you're experiencing anxiety in trading, you want to take a look at your sizing and make sure that it's appropriate for your risk tolerance and your capital levels. Anxiety can also be a function of our self-talk, how we process information relevant to what we're doing. And so anxiety is not just something we feel, it's something we do. It's a way of talking to ourselves based upon worry, based upon anticipation of negative outcomes. And so a very good way of dealing with anxiety, as I mentioned, is through these visualization methods. But in this case, the way you would use the exposure technique is by actually visualizing yourself getting appropriately stopped out of a trade. You're sized properly. The market goes against you. It hits your stop. You act upon your stop as planned. You take the loss. And then you vividly imagine how you're going to talk to yourself about that. And you want to be talking to yourself constructively about that. Maybe that stopped out trade tells you something about the order flow and how the market's trading right then and now. That would be information. Perhaps you were stopped out because you missed a bigger picture to the trade or to the market that you're trading. You are now using the stop out as potential information. So now you're dealing with the stop out constructively, taking information out of it rather than destructively by blaming yourself, catastrophizing, and hampering yourself for the next trade. But take a look at meditation techniques, relaxation techniques. These can be very powerful for controlling level of anxiety. There's an app called Headspace. Check that out. It actually teaches you how to meditate. And I know a number of traders who use it successfully. Thanks for having me, Mike. All right.
Yeah, man.
I appreciate the opportunity to be able to join all of you. And perhaps we'll do it again in the not too distant future.
Thank you.
Yep. And so for all of you that are, wondering how you can get involved with our futures community, perhaps find a way to get hired and trade on our futures desk. Towards the end of the year, we are looking at rolling that out and expanding and bringing on traders. Just reach out to us. We have the link. I'll put it in the chat here. We charge $7 a month for the Slack room, which is just our actual cost of each of your memberships for that premium Slack membership. So we do it free of charge. We don't make any money off of it. I'm specifically looking to build a great trading community of guys like Mike, perhaps some of you on this call today. Build a group of traders, a great community, build out a desk, and us be the best desk that ever was. And that's genuinely what we're looking to accomplish here. So get to know us, let us get to know you, and we'll take it from there. So Mike, thanks for coming and doing this. Brett as well. Just
Thank
wonderful
you.
time here. I know I enjoyed myself. I hope you guys did as well.
Oh, I thought it was great, and I'm happy to do it because I think it was very good for not only for me, but everybody listening, I hope. So.
Sure. All right. Happy 5th of July, everybody. We'll see you.
Have a good day. Bye-bye.